Okay, one other tool that you'll see me reference both on the weekly outlook, but also throughout the week is what I call the quick sheet. So we're going to talk about how to read that, how to find that, and then what is that, and what does that mean? Essentially, that is a way to look at all of the asset classes within the future space and organize them in a way that we can do some consistent approaches to that. So the way that we find that and get to that is if we are again in the hub. So we see the trade plan. Down here we have the specific quick sheet, and we can click on this button and that will open up the quick sheet, which we can then download and print if we would like. But this is organized by asset class. So we have the indexes first, then energy, then treasuries, and then metals, grains, and currencies. Okay, there's a little bit of a glossary of terms down here, but this is very color coded to give you just kind of a snapshot of what's happening across a bunch of different markets. You can see on this one specifically, we're seeing a lot of red across the board in the equities, but it can give me a quick snapshot on a number of things. One, I'm looking right here and I'm seeing a lot of yellow. What does that mean? That means that all of these products have already got to or are close to their weekly implied lows as seen in the options markets. How can that help me inform my trading plan? As I can say, wow, these have already hit the implied ranges, so they could be ripe for a kickback in the other direction. You'll see this right here, which is the posture, and you see there's a number of different ones that looks a little bit like a heat map. So I'm just going to walk through what is a posture and how do we use that to find kind of our way in a quick way. So a posture is a way of establishing context. And we'll talk more about this in module 11 specifically, but it's really just looking at three variables to find the context of any auction and essentially connecting to the idea that all auction activity is doing one of these two things. It's either distributing or it's developing. It's either imbalanced or balanced. It's either trending or consolidating, right? So postures are a shortcut to see what phase of the auction we're in. And we use three variables to quickly assess which posture we're in. We use the last price, we use the 5-session volume point of control, and we use the 20-session volume point of control. So essentially, most traded price last week, most traded price of the last month. These are not arbitrary. We use these because there are a connection to options expiration cycles that are related to traders who are active in timeframes that we want to be active in. So there's weekly expirations, there's monthly expirations. Those show up in the profile as dealers hedge and build out the profile relative to that. We do similar things in each posture, eliminating the guesswork of the narrative, but let's walk through a couple of those just to give you an idea of what those look like. Again, we talk more about this in module 11, but the first one, price equals the 5-day equals the 20-day. And this is a situation where you have the price, which is very close to the 5-day point of control, and also the 20-day. This is a balanced market. So we talked about there's imbalanced or balanced. This is balanced. So if you look at the quick sheet and you see something that's yellow, like gold here, that means it's balanced and it's ready for a move. Okay, so what's the first move going to be? The first move is going to be price is going to move away from these references. And in this case, to the upside, that could be price above the 5-day, which is equal to the 20-day. If that auction matures and is able to accept itself, the 5-day will come up to price. So now the price is equal to the 5-day, but above the 20-day. And then if price continues from there, then we get price above the 5-day and 5-day above the 20-day. This is what we call an auction extreme. And what's happened now is that the auction has, pushed itself out away from all the value references and is now in a place where it either has to pull the 5-day back up to it or it'll come back to the 5-day. And then in that case, it can come and get below the 5-day and above the 20-day. And this is a balancing perspective. So if this one is imbalanced, this we know the auction is now balancing and going back towards a place where all of those are in relationship. Now, what's super cool is that between these three variables, we find that there's about 9 orientations that show up over and over again, and they allow us to do similar things so that like when we look at whatever posture we're in, we're like, oh, so here's the likely next behavior to play out, and that can give us a shortcut to finding out what do we want to do with specific products. And then when we go look at the quick sheet, we can quickly assess, oh, so gold, everybody's balanced at 1863. That's where the next move is going to be. I'm going to look for some type of directional excursion away from there, and that could potentially get me into a trade that I know where I'm going to defend in that next phase of the auction, and at the very least inform my plan. So that is how to read the quick sheet and how to access that. Great guide, great contextual tool to know where you are at any time.